want to go over a quick example of my price per day trades using the E-Mini Nasdaq 100. Here's a chart of the March contract. January options follow the March contract. March contract closed at 2628.50. January options contracts have 23 days left until expiration. And we're going to look at the March as well. March options have 79 days left until expiration. Now let's look at option. I was looking at 2880 call option, 0.45. That's the cost. Now look here, look at the theta, 0.357. Okay, now we're going to look at the March contract, 2880, 11.75. Look at the theta, 1.781. There's the theta. This is how much it's going to lose between a certain period. And this option, the 2880 March, is going to lose more time value than the January. Okay, so I call it my price per day trade. We can call it a theta trade, whatever you want to call it. But the theta for the March options for the 2880 March contract is much higher than the January option, and also the price per day of that option is much higher. So we want to sell the March 2880 call. We want to sell the March 2880 call. Now I'm not advising you do this as a real trade. Everything that I give you in the videos or in the email newsletter, it's just paper trades. So please don't trade this for real. Just paper trade it. We're going to sell the March option and we're going to buy the January 2880 call. Okay, now here's a chart. 2880 would be around here. So let's say you look at this chart and you feel the market will stay steady or go lower. This is a great trade to put on because you'll make money if the market stays steady, if it goes lower, and in a rare case, if there's a huge move even higher, you can even make money, because once options start moving in the money, and both the January and March, let's suppose there's a big move fast and the market goes over here, once the options start going in the money, the prices will start to mirror each other, meaning they're going to be priced very similar to each other, because the more an option goes in the money, the less time value it has. So both the January and the March will eventually, if it goes deep enough in the money, it will eventually be worth just about the same amount. But there's probably not that much time left for that to happen. But in rare case, if there's a big move higher, you actually could make money. So market goes lower, stays steady, you can profit. So if you look at the chart and you think, wow, it's I'm pretty confident the market is not going to go higher, this is something that you could put on. Instead of just buying or selling the futures, you can just put together a calendar spread, in this case a reverse calendar spread. So this was my price per day trade, another example, and I hope you enjoyed it. Hope you have a great rest of the week and a great weekend.